What's going on, ladies and gentlemen? Thank you so much for tuning in to another performance coaching here at Darwinex. I want to take a very brief moment to introduce what we do here. This is our 13th session that I'm hosting for the community here. And for those of you that don't know me, my name is Sanjeev. I'm a trader, I'm a performance coach, and I like to do sessions like this to share the raw reality of what trading is like, share some insights, some experiences from my journey that I think make for good lessons, for good educational points that you guys can take away. But most importantly, I want you guys to walk away from sessions like this with a framework, a different perspective, a different way of looking at either yourself or the markets that gives you a new thought process to create a newfound performance in the long run. Now, this week's session is a little bit of an interesting one because it's a personal one for me. I actually wrote this up over the space of the weekend because of the week that I had last week, and I want to talk about that a little bit with you guys. And I want to talk about it mostly just openly, honestly, and like I said, just give a raw reality of what the world of trading and investing can be like. Because one thing that I think some or all or most of you will resonate with is the idea that the trading space, at least in the way that we know it with the modern world of social media, can be a little bit of a toxic place. It's not always filled with 100% truth. There's a lot of just blatant lies. There's a lot of exaggeration. And there seems to be this sense of everybody wins in this game. Everybody's making money. Everybody's riding, private jets and has fancy watches. And it's not always the case, right? It's definitely not always the case for most people, I would largely say, right? So this week, I want to talk to you about, and the topic that we're going to be focusing on is learning about the art of walking away. Now, I want to preface this by saying I believe walking away and learning how and when to do it is very powerful, but it's not the only tool that you should have in your toolbox when it comes to how you approach the markets, when it comes to awareness and regulation. It should just be one of the tools that you rely on in and amongst various other things. A lot of the other things I talk about and have spoken about on many of our previous sessions, and I will continue to speak about in many sessions into the future. But combining this ability to be able to recognize and know when the right time to walk away is, I believe is really important. And last week, it was a moment in time where I had to practice this for myself. So I mentioned this is raw. I mentioned this is going to be an honest and transparent insight as to what my week was like last week. And it's something that I had to learn. I wasn't always good at being able to walk away. It's something that I had to learn over time. And I think there are lessons in how I managed last week, things that I've picked up over the space of the last few years in this game that have helped me to be able to demonstrate what I did last week. And going to help you guys to be able to do the exact same thing, right? Understanding when is the right time to walk away and how to actually create that detachment to be able to do so. Now, for, again, complete honesty and context of what I'm describing here, last week, I felt like I had a pretty tough week in the markets. Not because I had an unfavorable or a negative outcome when it comes to P&L, but largely I just felt like last week was very heavy in terms of how I felt my week had went, right? To give you some context, I do a variety of different trading and investing every day and every week. I do a little bit of short-term trading, which is what you see me do most actively. And then I do some sort of longer-term, medium to long-term investments into stocks, crypto, a little bit of everything, right? I like to keep diversified as part of what I do. Now, last week in my short-term trading, I took 3 trades and all 3 of them were losses. 3 trades, 3 losses. Ended the week 3 are down. Now, I think what actually got to me wasn't necessarily just those losses in isolation. It was the fact that the stock market, for those of you that follow it, also took a little bit of a hit last week. The crypto market also took a little bit of a hit last week. And my portfolio across absolutely everything, short, medium, and long-term investing, was down completely overall. Now, it's not the first time I've experienced this. I understand completely logically and rationally that losses are part of the game. Periods of drawdown are normal. But for some reason last week, this all, maybe the right word to use is it irked me. It bugged me. It got to me in a way in which it doesn't normally do. I spent some time over the weekend, and I acknowledged this actually during the space of the week, which was I looked at all of the, at least the short-term trades that I had taken, and I acknowledged that actually I wouldn't have done anything differently. Every single trade I took fit. It was in alignment with my plan. It ticked every criteria that I needed it to for me to be able to justify getting into the market. It's just a case of probability not being in my favor. And again, from a logical perspective, I completely understand that. But in the short term, in that moment in time, it got to me. And by Thursday, I had taken 3 of my losses. I was kind of overlooking what was happening in terms of my other and wider portfolios. And it really just frustrated me. And I felt really down. I felt deflated is probably a good way to put it. And I decided that by Thursday night, I would be done short-term trading for the week. Now, as the market does, and I'm sure, again, some or many of you would have experienced this at some point during your career. And if you haven't, trust me, it's coming. But as the market does, I decided not to trade on Friday because I felt like I wasn't in the best headspace. And lo and behold, Friday presented a pretty clean opportunity. Well, actually, that's a lie. It wasn't the cleanest of opportunities, but it was a valid setup for what I looked for. It didn't play out in the cleanest way. It would have made money. It wouldn't have wiped away all my losses for the week by any means, but it would have made money. And it was the only trade that set up for me that actually worked. And I didn't take part of it, which again added fuel to the existing fire that was already burning from how the week had already started to present. Now, one thing that I learned very, I would say, early into my trading career, and this was largely after losing money for many, many years, and chasing this idea of perfection, both in terms of myself and in terms of the markets. I was looking for this perfect holy grail strategy. I was looking to be able to trade like a robot. The more time that I spent in this game, the more experience that I gained, and the more that I was able to observe others that actually did well, there was one overarching message that really stuck with me. And it was one of the things that when I started to accept, I actually started to find more progression and more breakthroughs as part of everything that I was doing. And it was this idea that good trading is not the absence of emotion. It's in your ability to be aware of them and to regulate them when they do creep up. And that's something I've observed in all of the best traders that I have met. None of them are immune to emotion. None of them are immune to frustration or thought or anger or being imperfect, revenge trading, trading on tilt, whatever it is, right? They all make these mistakes at some point in time, whether it's in terms of an action, whether it's in terms of a thought, whether it's in terms of an emotion, whatever it is, they all experience the exact same things. The one thing that I have found that they have learned to do very, very well, and something that I focus on quite heavily, is not letting the thought or the emotion turn into an action, right? That was something that I always struggled with. Back in my early days, especially in my first 6 years when I lost or spent the longest time losing, I found that if I was angry, I would act angry. If I was frustrated, I would act frustrated. If I felt FOMO, I would act based on FOMO. I had no way to separate the two, and I had no way to drive any sort of barrier between those to be able to give myself some detachment, some mental clarity to be able to figure out what the next best course of action is. Now, there are a variety of ways to deal with and handle these emotions. And again, some of which we have already explored as part of the 12 prior sessions that we have done from this one. But today I want to talk about a little bit more of a reactive response. A lot of, I would say 70, 80% of my work is actually aiming to help traders build a more proactive approach, which is understanding why the thought exists, why the emotion exists, and working on what you can do proactively so that you don't be as reactive in the time when it creeps up. You have a plan of action, you have a reframing process in terms of your mindset, and you can better act on that in the moment. But I don't believe that's the only key to the puzzle, because we are human beings. We're not perfect. We're not robots. At some point in time, even if you do absolutely everything perfectly, your emotions are going to get the best of you. You're going to feel or experience a negative thought. You're going to be frustrated with the market because that's just what the market tends to do. And the one thing that I try and focus on now, or at least the thing that has become most clear, especially in my last 5 years or so where I've been so fortunate to be able to connect and work with many traders at all different levels. Some that are consistently losing, some that are doing incredibly well in the space. But the one thing that has stood out is that everyone tends to experience emotion. The problem is most traders only build a plan of how to enter a trade. That's the only thing they focus on. How do I get into the market? Most people don't actually have a plan of how to exit from themselves. They don't know how to stop themselves because all you're focused on is trying to get in, and you don't know when is the right time to actually close the charts and to walk away and determine that it's not the best time to be able to do something. A lot of people reject this idea. They struggle with the idea of walking away because whether it's conscious or subconscious, they feel like walking away is admitting defeat. They feel like it means the markets have won and they have failed. I don't look at it that way, at least not anymore. When I walk away from the markets, and it has to happen sometimes, last week was a prime example of this. For me, walking away is not accepting defeat. It's an act of discipline. It's an understanding that this game is not about being right or wrong. This game is purely a game of risk management. There is no trader out there. Whoever you look up to, you could look up to some of the best traders of our time. It doesn't matter who they are. George Soros, Paul Tudor Jones, Tom Hugard, I don't know, whoever it is you look up to. Maybe it's ICT. Controversial one, but I have no idea. Whoever it is you look up to, I promise you, none of them are immune from taking losses. The only thing that bridges the gap between an unprofitable trader versus a profitable trader is your ability to be able to handle how much you lose on those spirals. And this is why I always try and correct people in the sense that progression and measuring your performance in this game is not just measuring your P&L and how well you do when you're in sync with the markets, but it's about how well you can cap the downside when things are not going to plan. Because as we've already established, losses are going to occur. There's no amount of knowledge or analysis that's ever going to negate that idea. Periods of drawdown are statistical. They're not personal. And so you have to be able to understand how to manage those periods. And so after many years of experiencing pain and kind of rejecting this idea and then opening myself up to this, I came up with this philosophy, which is something that I want to share with you and something that I had to remind myself of last week. And that is this idea that time will always fix your frustration, but it will never fix your account balance. It doesn't matter what the market has done. It doesn't matter what mistakes I've made. It doesn't matter how I'm feeling in the moment. However frustrated I am, enough time spent away from the charts will eventually fix that frustration. It will bring that frustration from level 100 down to level 50 or 20 or 10, or to a point where it's far more manageable that you're not going to do something stupid in terms of how you manage risk. However, if you decide not to have that detachment, if you decide not to have that time away and you decide that you want to try and beat your money back out of the markets, the likelihood is you could get lucky and win some money back. And it's probably not the most favorable thing to do because all you're doing is ingraining a bad habit. But in the long term, what that generally leads to is a detriment in terms of your risk management, right? Whether that you pay the price today or whether you pay the price at some point in the future, you are doing something wrong if you're not operating from a point of mental clarity. And so this is why I say, even if you walk away, as frustrating as it was for me to call it a week on Thursday, see that winning setup take place on a Friday and not partake in it, to at least recover a small part of the, I'm not going to call it damage, but the losses that we took last week. It was frustrating, but I understand that if I tell myself that it's okay to execute and operate when I'm not mentally at 100%, I'm telling myself that it's okay to perform at a subpar level. And something that I always talk about, again, you skip back through some of my previous sessions, you'll hear me talk about this time and time again. Trading is not a job. You don't get paid to invest time. You get paid to perform. If you don't have the right mindset to perform at the best of your ability, you are only doing yourself a disservice. You're only going to ruin your own performance. You're only going to amplify that level of frustration over time. And so for me, learning when is the best time to walk away and actually some practical ways to be able to do that is a really, really important part of this game. Because like I said, the reality is you're not going to win all of the time. the markets are going to frustrate you at some point in time. I don't care if you have a 70, 80, 90, 95% win rate and you win the majority of the time and actually you haven't had a losing month for the last 18 months. If you don't know how to deal with that one moment when the market frustrates you and it gets the best of you, you will give back absolutely everything in that moment and it will cost you far more than you can actually afford. Whether that's in terms of financial capital, whether that's in terms of mental capital. That's something that you have to be able to keep in mind, right? So the narrative of what we're building on today is this understanding that really the market does not punish emotions. Just because you're experiencing fear, anger, frustration, FOMO, the desire to want to revenge trade, the market doesn't punish any of that. It only punishes you either in the long term or the short term when you act on those emotions. And so something that I've said before and something that I want to reiterate as part of today's session is that emotions are not the enemy. Emotions are not the problem. If you learn how to react differently, if you learn how to break that cycle of behavior from allowing a thought or an emotion turning into a detrimental action, you can start to do something differently. And it's a piece to the puzzle that most people don't spend enough time refining. Because the truth is, we're not born with this ability. Most of us have been wired from our modern day schooling system. We're wired to believe that losing is a bad thing. And if you don't ever consciously rewire that for yourself, that's going to be something that you always struggle with as part of what we do in the markets. Okay. So today's topic, the art of walking away. I want to start by covering why we struggle to step away. Right? For those of you that have tuned into these sessions before, you will understand that a big part of what I like to do as part of these sessions is to help traders to understand that there are logical reasons why we tend to think, feel, and act the way that we do. And the reason I always like to explain this is because I want you guys to all understand that we are not, a lot of us don't lack discipline. We don't lack ambition. We're not lazy. We are all doing the right things. The problem is we don't understand that the majority of the reason why most of us suck at trading is not a you problem, it's a human problem. And by helping you to understand that there are logical reasons behind some of these mistakes that we make, it's going to give you some clarity and hopefully will allow you to reach a place of peace, to start working with your mind rather than constantly trying to go to war with it. Okay? So there are a few reasons which I have observed over time, both from myself, both from, again, the fortunate experiences that I've had in working with my clients over the last few years, as to why most people struggle to step away, even when they have acknowledged that they're experiencing either a detrimental thought or a detrimental emotion. One of the big ones is often the need to be in control, right? This need to actually control the outcome of what happens each and every day. The problem with this idea is we don't control the markets. We can't control whether we're going to make money today, tomorrow, next week, next month. This is just something that is out of our hands. We can only play the game of probability when it comes to the game of trading and investing. But we all come up with this mindset in the moment, especially when things don't go our way, that if I don't walk away, if I stay at the charts, I can fix it. I can recover that lost money. I can get back and bounce back from this period of drawdown. And what you're trying to do is alleviate short-term pain. And often the thing that is hardest, but the thing that is probably most necessary, you as a trader have to develop the skill set to be able to deal with short-term pain. If you never build that skill set, you'll always fall back in this predicament of that need for control, that idea and that mentality of, I can fix it if I just stay, if I take one more trade, if I reverse my position because I just got stopped out, right? It's a natural cycle that we all fall into. We want this need for control. Another big one that tends to control a lot of people, and again, many of you I'm sure will resonate with this, FOMO, the fear of missing out. What if I walk away and the market moves without me? It's happened to me on Friday. Was it annoying? Of course. Was I frustrated? Of course. Could I do anything about it? No, right? This is the game. What we have to go back to and remind ourselves of in that moment is, again, this idea that time will fix my frustration. but it will never fix my account balance. Had I executed with that subpar mindset, had I strayed from my plan and done something silly, and I lost more money, I would have kicked myself twice as hard as I would have for missing that profitable trade. You know, the one thing that over a decade in the markets has taught me as a student of the markets, there will never not be another opportunity. FOMO for me now really makes no sense. I remember back in the day when I felt FOMO, I felt like this was it. This was the only opportunity that the market was going to present. What time and experience taught me in this game is that there is always going to be another opportunity. There is always going to be another A+ setup if you can wait for it. And all you have to do is just sit on your hands and preserve capital to allow it to set up all over again, right? For some people, the thing that often controls us and the thing that stops you from walking away is largely your ego. Maybe this is tied into your belief system that we believe that losses are a bad thing, failure is a step backwards, a blown account, a challenge, a period of drawdown is something that's unrecoverable. But you tell yourself that I can't end today in the red. I can't end this week or this month in the red. And this is only amplified if you're trading from a place of needing to make money. The moment you need an outcome from the market, you're a complete slave to your emotions. And there's nothing that I can say that will ever change that narrative until you're ready to really make some change and to separate and break that need to make money from the markets, right? The last one that I think is, again, very, very prominent in today's day and age is our addiction to dopamine. And often you'll hear me talk about this from the perspective that most people approach this game with this kind of 9-to-5 mindset as well. Our mind in today's day and age, it craves stimulation, right? When you're standing in a coffee shop and you're waiting in line, what's the first thing most people do in that situation? Pull out their phone, they scroll. We can't stand 1-2 minutes of just stagnant being in the moment that we have to fill our time with something. Our brain craves stimulation. You couple this up with the idea that most people have this kind of 9-to-5 mindset. We've been wired with it from the schooling, the university system that most of us have been through. It's been cemented by maybe some of the experiences that we've had in watching either our parents or for us in our experiences at work. We think that if we spend more time, if we do more work, we will make more money. Our brain often makes this very simplified approach to the markets, and we think that if we're not in a position, we're not working. And that actually couldn't be further from the truth, right? Well, you have to understand that in the moment, walking away can feel like giving up, but it's actually you taking power back. It's you committing to a position. And that position is just on the sidelines, preserving capital. And as a risk manager, that is an active position which most people don't utilize enough. But the 9-to-5 mindset doesn't allow you to think that way. It gets you to believe that if you're not active, if you're not doing something actively in the markets, then you're probably going backwards, right? You're not giving yourself an opportunity to earn. I can promise you this, the hardest move that you will ever make as a trader, it's not closing a losing position. That's often difficult for a lot of people. To cut a loss, it's very, very difficult. Whether that's your stop loss, whether that's manually closing out, it's a very, very difficult thing to do because now you are in control and it's your responsibility for accepting that loss, the monetary loss, the ego hit that it takes. But that's actually not the hardest thing. I have found that actually something that feels almost more difficult, especially in certain situations, it's not closing the position, it's closing your charts. Just taking that step back and saying, you know what? I'm done. I'm going to live to fight another day. I may have lost the battle, but if I preserve capital, I can come back and win the war. And again, it's a mentality that most people don't take on board. They don't comprehend the power that sits behind the idea of just approaching this game like a risk manager, not a predictor, not a forecaster, not someone that cares about right or wrong, just someone that is focused on the idea of how much can I make when I'm right versus how much will I lose when I'm wrong. And if I can find my edge somewhere in that math, I can make money over time. That's as simple as this game really needs to be. The problem is most of us tend to overcomplicate it. Okay. Now, before we get into some practical things that you guys can start doing and building into your process and your framework of how you approach the markets, I want to start by building and raising our level of self-awareness. Because as I mentioned, good trading is not the absence of emotion. It's the awareness and regulation of them. Every session that you will see me host, when I am talking about fixing a problem, implementing a solution, you will often find it starts with a period of raising your level of self-awareness. If you only ever recognize a thought or an emotion in hindsight after you've made a mistake, it's pointless. You can't get in front of that. If you want to be able to change something, you have to be able to understand what are the signs, what are the triggers that something bad is about to happen, and that should be your moment to actually start to step away. Because most moments of tilt, most revenge trading, most over trading, anytime you start straying away from your plan, I find that it doesn't come from nowhere. There are cracks in your process that you can most definitely be aware of, either in your process or in terms of your mindset, in terms of how you approach the market. But you can definitely be aware of these things, because without being aware of them, they will build up, they will accumulate, and they will turn into some kind of frustration. They will turn into some type of anger. They'll turn into some type of thought and emotion, which leads to a detrimental action. And this is something that can very, very easily be avoided. So step number one of learning how to master the art of walking away is actually understanding what are the triggers, what are the signs that play out for me that determine the right point for me to actually start to step away. So I've got 4 different criteria that I want you guys to start keeping in mind. And I want you to take these away and actually ask yourself, which is most relevant for me? Because not all of them are going to be relevant for everyone. These are things that, again, I have observed both in myself, but I have seen in my clients. I don't experience every single one of these in the same way that some of my clients do. But this game is about understanding more so about yourself. How do you respond to certain situations? Because the better you can understand yourself, the better you can start getting in front of negative thoughts, detrimental emotions, and you can create that barrier, create that wedge, detach, and be able to start doing something differently. Okay. So the first one, and probably the most obvious sign that you should probably start to step away and create that space and detachment from the market, is emotional trading. This is usually the last thing that starts to appear. This is the frustration. It's the revenge. It's the boredom trading. It's your inability to stop chasing losses, right? It's all you want to do is just recover the money that you've lost. Maybe for some people, this is trading to feel better. Maybe for some people, this is trading to be right? It's all emotionally driven. We lose and we take the focus off of actually executing to the best of our ability, and we trade just because it feels like the right thing to do in the moment. Usually a bad sign. The moment you start making decisions based on emotion, you are opening the door for an inconsistent approach, largely because emotions are inconsistent in nature. Today, you'll wake up happy. Tomorrow, you'll wake up sad. The day after, you'll be excited. The day after that, you'll feel like you're depressed. This is the nature of emotions, right? They move in ebbs and flows. This is why motivation is not a powerful or consistent driver for change in the long run. Because one day, I don't know how long it's going to take. It might take days, weeks, or months. You will wake up not motivated. And in that moment, you fall back to your standards. You fall back to your process. And if you haven't upgraded your standards or your process, you'll just go back to the person that you were before. I've seen many people do this when it comes to health and fitness. I've seen many people do this when it comes to trading. I'm not going to revenge trade anymore. And it lasts for a week. And then something triggers them and they go back to exactly who they were. Because they didn't change the mental game. They didn't change the process-orientated game, the framework of how they approach the markets. So if you ever find yourself acknowledging an emotion in the moment, something that's going to be detrimental to your trading, that's a sign you should step away. That should be, I'm hoping, the most obvious one, right? But again, it's usually lost when it comes to the flow of how things go when it comes to being able to actually walk away over time. One that often goes amiss is mental and physical fatigue. Okay. Honestly, this is one that I tend to experience at times, often because, and again, me being completely raw and transparent, one of the worst parts to my routine is often my sleep. It's the thing that I probably neglect most. I'm living off of about 4 hours sleep today. Not bragging, not advocating this in any way, shape, or form, but I understand this will have an impact on my psychology if I don't correct this over time. Many days stretched out like this, it will most definitely have an impact. But the important takeaway is that level is different for everyone, right? Everybody needs a different amount of sleep. Everybody deals with stress and tiredness and fatigue in different ways, but they all manifest the same way. After a certain period of time, you cross this kind of line in the sand and you struggle to focus. You have poor judgment. You're more irritable. You start to experience like brain fog or analysis paralysis, a lot of people call it in the markets. And that tends to all open the door to impulsive traits. And it all roots back to one thing. You have decision fatigue. Your mindset, whether that's physical or mental, is not allowing you to make good quality decisions. And so this is why I often say, and I buy into the idea of how you do something is how you do everything. If you want to operate at the best of your ability, you need to be looking after many different areas of life. Sleep is one that I'm always trying to work and improve on, not one that I'm ever perfect with. And again, honestly, it's my weakest area, but one that I am definitely conscious of and definitely working to improve. If you're not eating right, if you're not exercising well, if you're not meditating, if you're not going out and getting some sunlight, if you're not touching grass, like these are all things that affect your mental and physical. If you're not mindful about how that impacts your performance, it's going to be something that gets the best of you. And again, the moment you can start to recognize these things, it can be that proactive gateway to say, you know what, maybe I need to not trade today. And this is especially for those of you that are short-term traders, right? Those of you that do the intraday trading, the scalping, that very short-term approach. When you're not in the right mental and physical headspace, it's going to have a much bigger impact on somebody that's, a longer-term trader, a swing trader, a medium-term, long-term position trader, whatever it is. Because it's all a difference in time between making decisions. If I needed to make a decision today, but I had no positions on because I'm not an intraday trader, that lack of sleep today is probably not going to be super detrimental to me. But for someone that's a scalper and needs to be able to make quick, reactive decisions based on a 1 minute chart that they trade, you having not slept well the night before, it's probably going to have a little bit of a bigger impact. So again, measuring these areas in terms of the mental and the physical fatigue that you're experiencing play an important part with regards to your performance. And they are a key indicator that maybe at times you should decide to step away from the markets. Okay. The third one, this is one that happens to me lesser of the time, but seems to be a common one with a lot of my clients. Ignoring your limitations, right? And this might be, for example, you give yourself a limitation in terms of a daily, a weekly, or a monthly loss cap to say, I'm not going to go below this limit. If I lose more than 1% per trade, I'm done. If I lose more than 3% in a week, I'm done. If I lose more than 10% in a month, I'm done, right? That idea of just one more trade, it's the last lie that most people tell themselves before a big blow up. And the worst thing that could possibly happen is you have that mentality of, I'm just going to take one more trade. And that trade works out. Because the moment you get rewarded for ignoring that limitation that you have set for a specific reason, again, is the start to every single bad habit. You may not pay the price today, but you will pay it at some point in the future. Okay? The last and final one, and I think this is one that most people overlook very, very easily, but it's a good sign that you should probably step away and do nothing until things start to change. And this is confusion in the market. This is often one that's a little bit outside of our control because it's heavily reliant on market conditions, which we can do really nothing about, right? Sometimes if the markets are choppy, sometimes if structure is not clear, these are all things that you need to be mindful of. Like if your edge is not present, there's nothing for you to do in the markets. I often like to say that most people come into this game because they're craving one of two things, money or freedom. When your edge is not present, that's the market giving you freedom. What most people mistake that for, is they then say, well, I'm just not seeing it. I need to find it. I need to look at a different asset class, or I need to change timeframes, or I need to start changing the criteria which validates a trade, because this person's in the market, that person made money today. Why didn't I do it? Right? Confusion in the market. That is your sign to step away. That is the market giving you the freedom that you are looking for. The problem is you are trying to create opportunities which don't exist for your edge. And that's always going to end in a bad way. Okay? If you can't, with clarity, describe and pinpoint exactly what you're waiting for, you shouldn't be trading. Just get out of the markets. It does not make sense to be risking capital when it is feeling unclear for you. Remember, capital preservation, being on the sidelines, often doing nothing, is a position. If you're not someone that is managing a very large portfolio inside of a hedge fund where you have clients and investors that are expecting something to be happening with their money, preserving capital is a very, very active position. It's one that you should be utilizing when there is no edge present in the market, okay? If the markets look choppy, if they look confusing, you, especially as a retail trader, you have the choice and the opportunity to say, you know what, these are not good conditions for me. I need to take a little bit of a step back. Even when you get to the stage where you start getting investor capital through Darwinex, through the platform, right? You have the ability to determine and say, you know what, my active position right now is flat. It's sitting in cash. Being able to preserve capital during these low quality conditions is what's going to allow me to really to thrive when my edge does start to present again. Okay. Now, how do you build on this? Now that we've got some very common signs, emotional trading, mental and physical fatigue, ignoring your limitations, and just general confusion in the markets. Now that you've got those signs that are clear, understand which one is most prominent for you. Which one do you resonate with most? Which one seems to lead you astray and gets you to do silly things in terms of your capital? That's the ones that you want to be most aware of. But keep them all in mind, right? Because they play out at different times for each and every one of us. But often what I tend to see is people are susceptible for different ones over different time periods. How do we build on this to say, I want to add some things into my process and to my framework to actually allow me to walk away intentionally, right? With raw intention. Well, firstly, I would say start by predefining your exit criteria. Create this as part of your plan. What actually needs to happen for you to say, I'm done, I'm out, right? For me, and again, you'll know this from the example that I gave last week, one of the things that I am sort of monitoring throughout the week is the state of my mental game. What's my mental edge like? Because if my mental edge doesn't exist, then my ability to execute my strategic edge is going to be impaired. And that's not something that I want to do. So when I talk about predefining your exit criteria, what is your exit criteria to say the market is not agreeing with me? I need to be done and I need to walk away and I need to lose this battle, but come back to fight and win the remainder of the war at another space in time. For some of you, that might look like a daily, a weekly, or a monthly loss limit. Like we've established, might be 1% risk per trade. It might be 3% over the space of the week. It might be 10% over the space of the month. Again, I'm just throwing numbers out, but use it to generate some thoughts, some ideas, some brainstorming, and do that in alignment with your data. How many opportunities do you need to give yourself for your edge to actually play out? Because if you're getting on average, I don't know, 5 trades a week, if that's what your edge statistically presents, but you're saying, I'm only going to give myself 1 bullet for the week, you're kind of impairing your edge here. So make sure whatever you decide has not been plucked from nowhere. Have it backed by data. Make sure it makes sense. Make sure you're not trying to fight this battle with both arms tied behind your back, because that's not going to do you any favors either. For some people, maybe the more logical thing to give you that exit criteria is actually a trade cap. Maybe saying, yeah, you know what, on average, I'm only getting a couple of trades a day, a couple of trades a week, that's going to be the maximum amount of bullets that I kind of want to expend at that point. I'm only going to take 3 trades this week. I'm only going to take 5 trades as a maximum this week. And that's going to force me to say, I have a limited amount of ammunition. I need to pick and choose where I want to fire these bullets. I can't just waste it on some C- setup because I haven't taken a trade in 24 hours. I need to wait for the right opportunity for me to be able to do the right things going forward. Okay. This one other thing that you can add to this in terms of your exit criteria. This is the one that I favor quite a lot on. This is an emotional check-in. This is one that you can build as part of your journals. Go in before you take a trade, rate your level of mental clarity from 1 to 10. 10 is I have the highest level of clarity possible. 1 is I can't think straight, right? I can't even figure out what I want to do after I finish saying this sentence. I don't know. Set some definition rules in terms of how you're going to rank yourself in that space, and actually ask yourself the question before you go and execute. What is my level of mental clarity right now? I like to think of this as my mental edge. If my mental edge is subpar, doesn't make sense for me to be in the market. And that's exactly what it felt like it was for me last week. I was frustrated. I was annoyed. I felt weighed down. And I told myself that even if a good opportunity presented, which it did the following day, even if a good opportunity presented, my inability to think clearly will probably ruin my odds of being able to make money in the long run anyway. So it's probably better I just stay out. Probably would have messed up either the execution or the management or the exit in some way, shape, or form. And that's not going to do me any favors either. So I'm probably better just preserving capital and sitting on the sidelines. Okay. So 3 different exit criteria as ideas that you can actually start to build into your journals, your process, your flow charts of how you approach the market. Daily, weekly, or monthly loss limits, giving yourself a hard trade cap, and actually stopping to check in with your level of mental clarity. Rank those emotions over time. Excuse me. Because the more awareness that you have over what you're experiencing internally, the better your performance is going to be externally. That's something that I'm always an advocate of. Okay. The second thing that I think makes sense to do, if we're defining some exit criteria, and these are things that you know right from the get-go, before you even get into the market, you know exactly what your exit criteria is. For me, it then makes sense to couple that up with a post-trade reflection routine, right? Looking over each trade that you've done, and you could do this as part of your journaling process when you're documenting the trade that you've taken, but actually asking yourself, am I trading well? Forget the outcome of the trade. Did I do everything in alignment with my plan? Did I stick to my edge? My strategy says I have to enter when this, and this happens. Did I do that? Did I exit based on this, and this criteria? Am I actually doing the things that I am supposed to be doing? Give yourself a pause, a break before going into the next trade. Because what I tend to find is when most people start to spiral and they go on tilt, they go from one trade to the next trade to the next trade with no pause or break in between. Just give yourself that breather. This is definitely a lot easier if you're not a very short-term scalper, where maybe opportunities are presenting and you're trying to scalp 1-2 ticks at a time. But give yourself 30 seconds, a minute, 5 minutes, 10 minutes, an hour away from the charts just to reset. Sit down and journal just one line, one sentence. Doesn't need to take a whole bunch of time. You could do this whatever type of trader that you are. Just journal one line about how you are feeling before you continue. Because this could make the difference of you could go into a trade blindsided. You could be missing the most obvious things that look obvious to people on the outside, but you are blind to your own thoughts and your own emotions. The moment you are out of a trade, you tend to lose bias. You tend to lose, you lose a lot of objectivity when you're in a trade, and you gain a lot of clarity when you come out. So once you're flat, once you're out of the market, actually reflect on your performance. Ask yourself how you feel. How did you perform? If you can understand in that moment that something has not gone to plan, that becomes an intentional period of time where you say, I need to walk away. If I'm not operating and executing at the best of my ability, what am I even doing? I'm not here to gamble. I'm here to make money. And the thing that allows me to make money is to stick with my edge as consistently as I can. If I'm not in my right mind to be able to do that, this is my sign to walk away. Preserve capital, not do anything more silly, and to just be done. Okay? The third thing that I recommend, and again, maybe this is going to be a little bit more fitting for shorter term traders, ones that intraday, maybe scalp, but also even those of you that are swing traders, this is information that you can gather over time as well. I like the idea of, if your data can support it, actually start to block your trading time out, right? Block that trading time out, meaning give yourself windows of opportunities where you would like to be present based on what your edge reflects is maybe the optimal time to be at the screens. That might be a couple of hours during the London session and a couple of hours during New York. In between, after, before, you don't need to be there. There may be profitable positions that set up during that time. There may also be losers, but your data is going to guide you to say, you know what? Even if I miss a few winners and I miss a few losers from this period of time, by simply optimizing this window, I have found that 65% of all my winning trades happen in this window. And actually, they give me a much more favorable risk to reward, or a much higher win rate during this time. And this is why it makes sense just to tunnel vision in during this period of time. For those of you that are trading the higher time frames, the swing traders, maybe there is a particular day of the week that is most prominent for you. Like some of the things that I measure over time is statistically, what day of the week does the high or low of the week typically form? And I also check this over a monthly basis. This gives me windows of time where it is a prime opportunity to be able to capture a particular range in getting in at a very favorable time. I know statistically that on a Monday or the first 5 days of the month, there is a good chance that you're going to get the high or low for that week or that month form within that period of time. If I can have my bias correct and I can get an entry within that specific time window, statistically, I'm playing to my edge here. I'm blocking out a specific window of time to help improve my odds. Outside of that time, guess what? That's your time to walk away. This is where you can start collating data with actually a part of your process that allows you to build that hard barrier to actually walk away and do nothing, because you determine outside of this window, it's low probability. It's not conditions that I really want to be partaking in, and therefore it's probably more sensible for me to step away and not do anything else going forward. Okay, so block away that trading time. Whether you win or whether you lose during that period, that is your optimal window for performance. And outside of that, you have committed to the idea that I'm not going to be trading during this time. Okay. The last one that I think is very, very important, and something that honestly I am trying to lead by example with when it comes to this area, and this is accountability, right? Again, I think the trading space lacks a lot of this. I think there are a lot of people that give this false idea of what real trading is like over time. I truly believe that by having someone or a platform to share your daily limits or your logs with, your trading journals with, it can increase the level of accountability that you have. And that's going to help you to recognize those moments when you should be walking away. You could do this with a member of the Darwinex community. You could do this with a trading friend that also has the same passion in business that you are looking to start up. It might be a mentor. It might be a coach. It could be a friend, a family member, someone to keep you accountable for the things that you are supposed to be doing. I always tend to find that discipline grows faster when it is seen by others. For those of you that follow me on social media, primarily X is kind of my go-to platform of choice. You will have seen that over the last few months, I have been sharing my journey in terms of my trading performance at the end of every single week, whether it's great, whether it's not so great. I posted about my performance last week on Saturday. I shared a screenshot of my trading log. I talked about some highs. I talked about some lows. And again, it's a way for, yes, documenting and keeping a journal for myself, but well and truly, it's accountability for me. I don't want to have to report. I don't have a huge following, but I don't want to have to report to the few followers that I do have that, hey, you know what? I screwed up this week and I was supposed to walk away and I didn't. It gives me that extra layer of pressure to force myself to do the right things. Again, I'm choosing to do this in a very public way. You guys don't have to do that. Again, get yourself an accountability partner. Get yourself someone from the Darwinex community. Get yourself a mentor. Get yourself a coach. Someone that's going to be raw and honest with you. That's going to be able to look back and say, hey, you know what? You're supposed to be doing this, but you're not. You should have walked away after this, but you didn't. You told me last week, or you described that your rules say after 2 losses, you should walk away. Last week, you took 4 trades. What happened? Accountability is the key to success, but a lot of people tend to lack it. And then, honestly speaking, and again, I don't think this is some secret source from the coaching space. As a performance coach, one of the things that I provide best for my clients and what gets me the best results, it's not that there's some magic that goes on behind the scenes. It's actually understanding that accountability makes a big difference. With every client that I work with, I want a copy of their journal at the end of each week, because the raw reality is nobody wants to pay money to have a session with a coach and to turn up at the end of the day and say, you know what, I screwed up again. Nobody wants to do it. But that added layer of accountability is what makes this type of relationship so powerful. Yasina says, easier said than done, I presume, right? And I agree with you. It most definitely is. These are not easy things to be able to talk about. But if you're serious about having that level of accountability in your approach, if you want to be able to improve your ability to be able to walk away, I promise you, try it. Step out of your comfort zone. Seek a mentor, seek a coach, seek an accountability partner from a community that you're in or wherever it is. Social media is a great place for this in this day and age. Just send that message. And I promise you, when you find someone that you get along with and you gel with, accountability will take you to highs that you have never been before. It's worked wonders in my life. I have 2 or 3, well, actually I have 2 accountability. One is a group. One is a one-to-one thing that I have with a specific trader. And then I have a community that I post in to help with my just overall weekly accountability. So I have 3 different areas where, even as a coach, I am trying to keep my accountability as high as possible. Not because I'm trying to demonstrate or show anything in particular, but largely because I think it's just beneficial for me in terms of a person, right? Last few things that I want to kind of wind this session down on. We've talked about some very, very intentional ways in terms of understanding how and when to walk away, defining that exit criteria, building that post-trade routine, blocking out those specific trading windows, and having that higher level of accountability. I want to give you guys some techniques that I use week in and week out to help me to regain control. Because as much as we've talked about the benefits and being able to, recognize and walk away, I promise you the market will frustrate you. And what you need is a process and a framework that's going to allow you to reset and actually regain control so that you can do the right things and less likely to do some of the wrong things. The first thing that I recommend for absolutely everyone, if you're not doing this, you're really missing out, because this is the holy grail of trading. It's keeping a good journal, right? Write, don't react. When you're thinking about doing something, write it down. Awareness is the start of breaking emotional loops that you start to experience. Over time, and once you collect more data as part of your journals, it becomes an exercise in pattern recognition. You will start to identify what triggered frustration, right? Not just what caused losses, but what actually started that process to begin with. It becomes less about the outcome of the trade and more so about what caused or what led to that potential outcome. Because every time you experience frustration, anger, revenge, FOMO, whatever it is, there is something that triggered it. And your journal is the holy grail that over time, with enough data, allows you to start to connect those dots. You start to be able to understand that thought triggered that emotion, which led to that action. If I could simply reframe that thought, the emotion would be different and therefore the action would be different. And this is why you'll always hear me say that change in terms of your actions always starts internally. The moment you get that down, everything else becomes easier. Okay, so journaling is my first technique that if you're not utilizing, implement it as part of your process to help you to regain control. The second one that I often advocate, have a practice of mindfulness that you can fall back on. Whether that's just stepping outside, a little bit of grounding, taking a walk in nature. Maybe it's a breathwork technique. Maybe it's box breathing. Maybe it's the Wim Hof method. Maybe you want to pick up and start a short meditation, right? Meditation is something that I am huge on. I actually just passed a massive milestone for me personally. Yesterday was my 1000th day in a row of sitting down to meditate every single day, right? I've broken it times before. I've been meditating almost daily since 2018, but this is the longest streak that I have ever had over time. All of these mindfulness practices, whether it's meditation, whether it's breath work, whether it's just getting outside and turning off the charts, they allow you to reset your body. They allow you to reset your mind. They allow you to kind of calibrate and bring yourself back to the present moment, because that's when most people get lost. When most people are acting impulsively, it's because they're either so focused on the future or so focused on the past. The moment you recognize that the most powerful moment in time that exists is the present, you will start to take risk management more seriously. It's the reality of the game that we play. Okay. The third one I want to add on to this in terms of techniques to regain control. I'm a real big advocate of physical movement, right? Actually changing the physiology of what's going on with your body. I often find that frustration it feels like trapped energy, right? And one of the things that I often advocate is just to get out, do something physical. It might be full-blown gym workout. It might be just taking a walk. It might be stretching, but using motion to help you to restore a more balanced state, or what I like to call emotional equilibrium, is very, very powerful. And again, it's one that's very, very underutilized. What we don't understand is when we're frustrated, it is presented in our body language. It's the same reason that you can look at someone and identify that they're annoyed or they're happy or they're sad or they're down or something's wrong or something's right. We understand what that body language looks like. By actually changing physically that body language, you can snap yourself out of certain states and get yourself to start thinking about things in a completely different way. Okay. The last and final point in terms of techniques to regain control, and this is going to be the final one for today. I think it makes sense at the very end of your day to be able to reframe what has happened in your day if you felt like it did not go your way. If you've done all of the right things in the market and the outcomes just haven't been in your favor that day, that week, that month, maybe that quarter, what you have to understand is unless you can change the perspective at which you are looking at that, it's always going to get the best of you. If you had a bad day today in terms of performance, but you did all the right things, that's not a wasted day. You didn't do anything wrong. If you decided that you walked away, but you found out later that you missed 2 or 3 clean opportunities that day, you didn't know those opportunities were going to exist. Otherwise, you would have been present, right? What you did was you prevented unnecessary damage when you identified that you weren't in the right headspace. A winning day doesn't have to mean that you made money. Sometimes it means that you keep it, right? The philosophy that I live by and I preach to everyone is this understanding that trading is a twofold game. Step 1 is you have to learn how to make money. Step 2, and often the one that's neglected, is you actually have to learn how to keep it. If all you spend your time on is learning how to make money and never knowing how to keep it, you're either going to be consistently losing or consistently breaking even. Neither of which are the aim and the objective of what we're working towards over time. Okay? So develop that ability to reframe, whether it's walking away, whether it's the outcome of that specific day. If you never have that ability to switch that perspective, you're never going to be able to develop consistency in the long run. And consistency is not always P&L up and to the right. It's sometimes taking those dips, sometimes having those flatline periods. They are completely normal. When you zoom out far enough, a very inconsistent short-term approach can be part of a very consistent long-term approach. And it's just one perspective that most people tend to overlook over time. Okay? That is all for today's session. Thank you all so much for tuning in. I hope you've enjoyed today. Most importantly, I'm hoping it's given you, as I said at the very beginning, a different perspective, a different way to think about the markets, your performance, your approach, your process, and something that you can take away to start to tweak and refine your approach to help improve and give you that more consistent performance over time. Okay, that is all for today. I will speak to you guys again in a couple of weeks' time. In that time, make sure you're disciplined, make sure you're doing the right things, and I look forward to speaking to you very, very soon. Take care, my friends.